in this environment. I think we have been discussing since morning how fund managers are going to manage funds. But important thing is in this turbulent market, especially last 1.5 years what you have seen, how do we create alpha? In fact, we'll try to cover that through the presentation and discussion. We'll keep it more interactive. I think that will be more important. Let them settle down, and I think most of the people are back. So let me just introduce myself in terms of. Thank you so much. So that my topic is already. Let me introduce myself. I am Radha Raman Agarwal. Worked with Asian Paints, Pidlite for almost 20 years. 15 years with Asian Paints. My last role was with Pidlite. I was basically handling the merger acquisition, strategic finance. Almost 20 years, all in out in terms of finance, primary business finance, leading two of the most valuable companies in the country. We started this is the third year of our fund. In fact, we'll be covering. We were ranked top 5 in terms of both the years. I think we'll be covering in detail what we are going to do. So our topic, I think, is a very interesting topic for all of you, which is more in terms of how do we create alpha in this environment. The environment has been quite tough. I think 1.5 years, everybody's paused room. People sitting here, I heard interactions. I think the investors right from 25 years, 35 years, with the young guys who are there. But I think everybody faced the music, at least last 18 months have been tough, even tough for us as well. So let me take you through what we are basically looking at. So I think the most important question is it over? Is the rally over which started post-COVID, or is it something we're going to continue? I think what we are going to discuss is about the pillars, what are there, especially for next 5 to 10 years, how India is going to behave. So effectively, if I look at the most important thing, we have tried to cover high working population. I think India's young population, all of you are aware, that's in the stride for the country. Then we have the robust digital infrastructure. I think the way we have set up the whole digital infrastructure, that has been quite phenomenal for us. We have the whole policy continuity. We have got a BJP government, very, very strong at the center, and the policy continuity will be very, very strong. I think unprecedented in the history of the country. Then you have the corporate productivity. I think corporates are doing quite well. The balance sheets are more leaner and cleaner. And the last point is sustained earning growth. If you look at slowly, the earnings are coming back. And these are the pillars I would like to say that overall as an economy, for next 5 to 10 years, how it's taking shape. So this is more in terms of next 5 to 10 years. Let's look at the foundation for 2026. I think we started the year with a tax cut. We followed with a GST cut. RBI kept giving concession in terms of repo rates. So effectively there were 3 engines which the government fired. Then we had the 2 external events. We tied up with EU, we tied up with US. I think what we're trying to cover here is the EU deal, the US traffic, GST income tax, and the RBI rate cut. I think with the backdrop, 2026 has seen all those changes, and slowly the impact will start coming in now. If you look at that's a piece what we're trying to say, what is there in the fold for 2026. So if I look at the themes, I think all of you are aware of the Viksit Bharat theme. That's 2047 that government has put across. Then the whole focus in terms of how we are looking for manufacturing and capex across the country, the way the PLI schemes are put, the budget which has come in. I think it's very, very important to take note of that. AI adoption, I think we have seen maybe issues with IT stocks, but AI will going to get adopted, and overall I think there will be a lot of improvement in the productivity. So that is going to be a theme. Then we look at the 2 important themes here. One is the consumption trend, which I am going to cover in details, and second is the manufacturing trend. I think these will be 2 pockets I would like all of you to focus on. These will be the overall themes which are going to shape up for 2026. So here I would like to bring attention that what are changing in consumption. The most important thing which is changing is premiumization. So what is happening, more and more people are getting better products. Say for example, today you will get a Oyo room much cheaper, availability is much higher. But at the same time a Taj room, which is worth 50,000 room night, is difficult to get. I think that's a change which is happening today. If you look at all the companies have reported better numbers in terms of higher realization for high quality products. You look at motorcycles, people are buying Royal Enfield, a lot of people are upgrading a lot of cars. Every sphere you look at, with hotels, with any kind of consumption. For example, the clothes what we wear, the branded clothes. And the most important trend which I would like to highlight is urban plus rural. I think there's a lot of spend which is happening in tier 2 and tier 3. Overall, the upgradation cycle is going to be very, very strong. And that is going to drive the consumption theory in the country. I'll give an example. We invested in a company called Cookie Man. A lot of you must have seen at the airports and all that. They sell cookies at 780 rupees a kg. So I'm just giving in India where the market is around 200 rupees a kg. Their selling price 780 rupees a kg. And they are growing at 30% CAGR. So what I'm trying to tell you is that premiumization is something which is taking a big step moving forward. The last, I think you must have heard also, Airtel announced 20,000 crores of outlay for the NBFC. So there's a lot of consumer credit happening. So effectively, the consumer has got money in the hands because of higher salaries, better pay. What is also happening is a lot of credit in the market. So all of the consumption cycle is anyways taking a lot of shape. And I told you the latest example, say Airtel is getting into the business. They have put an outlay of over 20,000 crores. There are a lot of cycle companies. So today you go to any purchase, you can buy anything on EMI. In fact, most times they will say you a zero cost EMI. The whole idea is the consumption cycle is going to move forward. More and more companies are going to do consumer finance, and I think it's going to take a large shape. So manufacturing, I think this is an important area which government has put a lot of thrust on. So most important thing here is how we put PLIs, how the MSME, SME sectors are going to take a move ahead. So that's going to be very, very important. I think the industries are looking at semiconductors, electronics, renewables. So the whole idea here is that how India moves ahead in terms of manufacturing, that's a piece going to get a lot of thrust in the coming year. See, this is all about India. Now we talk about, in fact, the place what we are in, the alternative space. I think alternative space overall has been growing at 31% CAGR for the last 10 years. That's something which is exceptional. And that is going to continue in terms of the growth. So in fact, most of you invested in the PMS and AIFs in the past and currently going to invest. So effectively that pace is much, much higher. So let me tell you, going back to my topic in terms of how do we create alpha. These are the 4 mantras. ये 4 मंत्र हैं जो हमको alpha create करके देंगे. First is prioritize quality over momentum. We have a lot of habit of getting into momentum कि अभी defense चल रहा है, अभी railway चल रहा है. We should avoid all that. We should stick to quality. I think that's the first mantra which is there, which is going to create alpha. The second mantra is how do we differentiate? How do we also bring other aspects of investing? We have been always talking about long only equity. We should also look at in terms of corporate actions, which are typically your hedge transactions. Then you have got unlisted equities, which is maybe pre-IPOs. We have got industrial capex and then energy infrastructure. So a lot of areas we try to maybe expand and move ahead. The third mantra is active rebalancing. I think gone are the days where we're talking about buy and hold. A lot of times people talk about long-term investing. But at time today we have to look at is how do we also create alpha for us, because the markets are moving up again, coming down for so many reasons. The geopolitical conditions are so tough. So effectively there will be times where we take a call, maybe book some profits as well, and wait for the right opportunity to re-enter. I think that's what we're trying to say here. And the last is volatility. I think can we use volatility to our advantage? The answer is yes. So you'll see if you look at last 1 year, market has given enough opportunities. It has been swinging right from 24 to 26. At the same time, but it gives you the opportunity to enter and re-enter. So effectively, that opportunity has to be taken care of. We can't sit and relax. Earlier, if you look at a lot of times, you'll say we'll remain invested and create value. That is not happening. And if you look at last 18 months, I have a live example of that. So these are the 4 mantras in terms of what we're talking about in the fund. And I also tell you then how we incorporate those mantras into our fund, right? Prioritization, broaden portfolio, active rebalancing, and how to embrace volatility. I think these 4 mantras हैं which can help us to create alpha. And next I'll take care in terms of how do we create that alpha in our fund. So Swyom India Alpha Fund we started in September 23. So what we do here is we do listed. Within listed we do multi-cap. So we have looked at large cap, small cap, and we have heard my learned speaker talking about the SME. I think we do that as well. The whole idea is to do multi-cap more in terms of can we steer ourselves in the market wherever is the advantage, can we take that advantage? So we do listed, then we do corporate actions. So typically these will be merger acquisitions, more in terms of open offers, buybacks, warrants. That's a piece that helps us to balance the portfolio. And the third is unlisted, which will be typically pre-IPOs. What we have done is basically we have tried to combine all 3 into one product, which is the fund. So that's our allocation. In fact, I'm going to discuss in detail. We also accept technical investors here. So multi-cap, multi-strategy, open-ended and sector agnostic. Why open-ended? I think that's very important that we don't want a lock-in. A lot of people refer that AS means 5 to 8 years lock-in. Here we are offering a full liquidity. So effectively what we are trying to say is that you can go and redeem your product whenever you want money. I think somebody was talking about that whenever I want to invest, I can take it whenever I want to. I think this product is a live example of that. So maybe a few areas. Research is the core in terms of our the fund. We are market cap agnostic, so we don't get into market caps. So we'll have a good mix of small cap, mid cap, large cap. Premiumization is a theme which I covered. I think that's a theme what we like to drive. diversified portfolio, high skin in the game, so about 7-8% of the fund I have invested myself in the current structure, much higher than the SEBI requirements. Then obviously you have a leverage because of the Cat 3 AF, so that's the advantage what comes in the AF. So if I look at, we are sector agnostic, but the theme, if I look at current theme what we are drawing, this is Mr. X and Mrs. X. So broadly this is a theme, this is a new Indian. And this is a young Indian which is going to drive for next 5 to 10 years. So what we are trying to do is travel tourism, hospital healthcare, home furnishing, consumer discretionary, financial services, consumer durables. Financial services means both on lending side as well as in terms of wealth management side. What we are trying to capture is an aspiring Indian, broadly which is making a lot of money, and where is going to invest, where is going to spend. That place we are going to capture in terms of the fund. That's a larger principle. We do outside, in fact, we do some bit of infra capital goods in power as well. But by the end, like, this is a larger theme what we are going to drive on. So coming to the stats, so primarily the way we look at is we do a multi-cap, we segregate listed equity about 70%, 30% maximum unlisted, currently about 90-20. That also depends in terms of what stocks we are getting. We mostly do primary issues, we don't do secondary issues to the market. And within listed also we do all multi-cap, large cap, mid cap, small cap, that too as well. So this is a typical holding cycle, 15 to 25 holdings on the listed side, 5 to 10 unlisted side, and then you have about 4 to 10 corporate side. So that's a broad theme what we're going to drive. And in fact, what we're trying to cover is that how we bring in best of all worlds into one product. So the whole idea is that how do we maybe manage the volatilities. Going back to my topic, that how do we create alpha. That itself gets explained the way we have structured the fund. So if you look at how we have delivered, on a 2-year basis, we have outperformed Nifty 500, our benchmark, consistently. On a since inception basis, we have done that consistently. Thank you. So this is in fact my sales team has this disclaimer. So I'll be open to questions. I think we have time for that, right, sir? You have been very miser, by the way. No, I try to wrap up. I think we were overdone our time. I understand that. So I was also trying to be quick on my presentation. So we'll take the questions. I have been only allowed one question. So, sir.
We have 8 minutes, so we can take 2 questions.
Sir, thank you for the liberty.
We have 8 minutes.
Yes, sir, please.
Just the interesting part was the open-ended. How does that work in the?
Well, I'll tell you basically how does it work is we have only 30% unlisted, 70% is listed, and we have got a lot of granular book. So the whole idea is that we can, for example, all the investors are going to come for investment together. That's one. And pre-IPO also mostly the stocks which are already, we don't do early stage investing. We do late stage, mostly pre-IPOs. They are also liquid. For example, we have got ESDs in our portfolio at 225. It's sellable in the market. So effectively the whole idea is anyways we have 5 to 7% cash in the portfolio at any point of time. The whole idea is can I give liquidity to my clients? That's more important. Sir, most of the clients invest for 3 to 5 years. But they would want an assurance that tomorrow if I need, can I get the money?
Exactly, that's the point.
Thank you.
Interesting, very
But
interesting.
very good question, sir. I think it's intelligent observation.
So I think it's for everybody. The main thing for AI, if I understand, is the lock-in puts a lot of
So
people
we have
down.
zero lock-in.
Sir, what is the fee structure of your fund?
That will take one-on-one, the fee structure. More about fund strategy.
Sir,
Yeah, thank you very much for your presentation. So quick question was, you said that we are allowed to liquidate at any point of time. So at that point of time, whatever unlisted space you have, that is not traded. So how will you decide the
I'll tell you,
price for
basically
that?
we value unlisted twice a year, 30th September, 31st March. So let's assume you redeem on 1st of November, 30th September rate will apply to you. If suppose you redeem on 1st of May, 30th 1st March rate will apply to you. It's a semi-listed value, just the value, similar like Cat 2 fund what they do.
Okay, so and this fund has already started 2 years ago. So if you enter now,
Yeah,
if you enter now, we already have our AUM which is
I'll tell you
higher.
example. My fund, the current ESS value is at 6 rupees per share. The IPO is expected in March, maybe April at max. That might come at 450, 500. If you enter today, you enter at 300. Say for example, March the value does a value 400 rupees now. Then you will enter at 400.
Thank you.
Thanks.
You said it's leverageable, so can we borrow against your fund? 2 times leverage.
No, so leverage is basically for my fund.
Oh,
I can use derivatives in my fund because of Cat 3.
In AI, if it is leveraging is not allowed.
So we don't pledge our shares, it's not allowed also, we don't do it also.
Anybody has any question, we have 2 minutes to go. So please feel free.
So you're auctioning my question.
Sorry, taxation, Cat 3, Cat 2. Individual level, Cat 3, Cat 2 taxation is a little different.
I'll tell you, Cat 3, the taxation is actually at the fund level. So effectively what happens, there is no hassle at the end of the customer. In fact, I have a lot of big four partners also. They don't have a hassle. For example, a lot of people have a problem in terms of insider trading policies also in their companies. But the taxation happens at the company level, the PAN number of the trust is used. So in fact, it's far more efficient in terms of taxation.
Anyone else?
Thank you so much.
Once again for this insightful session. Mr. Vikas, please come on stage to hand over a token of appreciation. And Mr. Samir as well. Please put your hands together for Mr. Agarwal once again.
I would like to request Mr. Rajesh also to please come. I have a lot of respect for him. Please stay back. And Rajesh, both of them are my special guests, and we as a house have been associated with them since the beginning, and
Please keep the applause coming down.
So yeah, both of them are doing absolutely different way of managing public money. Absolutely. We've done all kind of due diligence as far as their funds are concerned, and as a house we can say that proudly we are proud to have been associated with both of you. Lot of respect for both of you, and thank you for the commitment. Because of you, all of us are sitting here. So thank you so much. You are the main heroes behind. Thank you.